80 points now, so looking pretty solid and pretty good out there.
The markets, they continue to edge higher, up around 98 points on the Nifty as we speak.
This is the last hour of what has been a truly good series for the bulls. I mean, of course, this week's volatility notwithstanding.
Nifty Bank was the sore point today. That from being the big outperformer was the underperformer by the time we wound up. It ended with a cut of close around 0.5%. And the breadth of the market as well, that was firmly in favor in the number of stocks advancing.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Ekta Batra. Here are the top stories that we're tracking this evening. Indian financial markets remain cautious as they wait for fresh triggers from the central bankers meeting in Jackson Hole later this week. Stocks give up early gains, drop sharply into the red in the fag end of trade. Sensex and Nifty close 0.5% lower. Bharti Group and Singtel promoted Bharti Telecom is set to buy the Singapore telecom major's 3.3% stake in Bharti Airtel. The move lifts an overhang on the stock. The Fertilizer Ministry moves a proposal to introduce One Nation, One Fertilizer from the 2nd of October, orders all fertilizer companies to change packaging on subsidized fertilizer, says 2/3 of the bag must display the brand name Bharat and the logo of the central subsidy scheme. Lupin gets a complete response letter from the US FDA for important inhaler drug Spiriva. The company tells CNBC-TV18 it is hopeful of resolving issues and getting an approval for the generic by Q4. In stocks and news, RBL Bank rallies for the second straight day, gains 5% on a large block deal. Asahi India hits 52-week high on rising auto demand and new launches. All right, well, let's tell you what we have lined up in this on the show for you. It's a packed show as always. In Market Opinion, we have Sridhar Sivaram of Enam Holdings, and in Corporate Voices this evening, we have Ramesh Swaminathan of Lupin. A last-hour collapse on expiry factors saw the Nifty, Sensex and Nifty Bank fall over 1% from its highs. However, for the series, the markets gained for the second straight series. Frontline indices rallied between 4 to 6% in the August series. Anuj Singhal is here with a wrap on all what took place today.
Well, the market was doing absolutely fine up until 2:30, and then somehow the last hour really, the bears came back with a vengeance. Maybe it was the expiry factor. It was the monthly expiry, remember, and the market had some decent gains. But the Nifty slipped over 200 points from day's high, and the Bank Nifty slipped 500 points from day's high. In terms of stocks, you had the two large cap IT stocks, Infosys and TCS, leading the decline. Some other heavyweights like HDFC, Larsen & Toubro, ITC, some of the stocks which normally move on expiry day were also dragging the market. And of course, you had other names like Adani Ports, Bajaj Finance and Cipla, which were also down. Now, the broader market was actually doing quite okay, even on a day like today. Despite the last hour decline, and you had some select gainers like BHEL, L&T Finance, City Union Bank, all F&O names, all up between 5 to 10%. All in all, you'll say that perhaps the trend is still slightly on the upside. There's of course this Jackson Hole Symposium which comes up now. So let's see how the market reacts to that. For today, of course, the last hour really brought some volatility back into the picture.
Okay, all right, some volatility back into the picture. Anuj, thanks very much for that. Let's get in some market opinion then. Sridhar Sivaram of Enam Holdings said that while the Indian construct is looking great, the global one is not. He added that one must buy on dips in the Indian markets. Listen in.
Our broad view is that the construct for India is looking great. I mean, inflation, we think for the month itself will come around 6 and it is trending lower. GDP growth looks like it's trending upwards. Consumption is looking as if it's coming back. But when we look at the global construct, it just doesn't look that great. I mean, it will be very difficult for India to move in isolation. So if there is issues globally, we will face the brunt. So I would say that this is more a buy and dips market. You have to be very careful when there is irrational exuberance. Broadly, the value guys are on top, and growth is suffering. But our view in the last 2-3 months is that it's time to slowly get into growth. And the first of the block, at least that's our view, is the financials, which is the banks. See, the private sector banks have really come out very well. They credit costs have actually normalized much faster than anybody would have anticipated. We think that the next 5 years is going to be great for large banks. Any bank which can access liabilities, that's going to be the crux. That if you are able to access CASA and your deposit cost is reasonable, then I think those banks will do well.
Okay, well, let's get in some more opinion then. Fukain Yap, who's the senior investment strategist at StanChart, is optimistic about the Indian market. He added that he prefers large caps.
We also see India outperforming Asia ex-Japan equities. So we have a preferred view for India equities. And, the view there, I think very much is driven by what we see as still a strong domestic economy. And I think we're seeing very strong earnings growth, double-digit earnings growth, I think, for the third consecutive year in India for the Nifty index. So, and that's much better than other places. In other places like China and Asia, it's looking at single-digit, and it's been actually being downgraded, whereas in India, actually, it's been quite positive. So, across against that, of course, is always the valuation premium for India equities. It's trading at a premium to its other peers, and the premium is actually above the historical average. The view that we have is more on a large cap in India. We prefer the large caps to the mid and small cap. We think that's going to be a bit more beneficial in terms of the domestic macro strength. But also, being in a bit more of a volatile market situation, we think the large caps are the ones that we do prefer. And the other tilt that we have in India actually is towards the value-driven stocks. And that's another theme that we have globally as we see rates going up. That's actually beneficial, we think, for value. So, value did very well in 2020, 2021. This year has been a bit mixed, but we do see the strength of value stocks broadening out. And that is actually another theme that we prefer within India.
All right, on to the second headline now. Bharti Airtel ended the day mildly higher after the company's promoter Bharti Telecom is looking to hike its stake in the telecom major, with Singtel set to sell 3.3% stake in the promoter entity. Nimish Shah is here with the details on this story.
This is the official disclosure which came from Bharti last late night, wherein it's an indication that Singtel, which owns a little over 13% in direct entity, will sell 3.3% stake at a valuation of close to 2.2 Singapore billion. So that works out to close to 13,000 crores. Now, because both are promoter entities, it looks like it's going to be an off-market transaction between the two promoters. So Singtel will sell 3.3 and the Bharti promoter entity will buy out in Bharti Airtel. That's an arrangement which was officially disclosed. Now, beyond this 3.3%, it doesn't look like there will be further selling from Singtel, at least in the near term. That's number one. And two, there is a disclosure that going forward there could be further readjustments of the stakes between the two promoter entities. So that's the official disclosure. So the market is reacting positively. The stock is because one, the belief is that this will not be in the open market; it will be an off-market transaction. So there will be no supply overhang. And B, the fact that there's not going to be further selling from Singtel, at least in the near term. That's a relief rally. So that's why stock is reacting positively. But in a big corporate development, Singtel has decided to sell or transfer 3.3% stake in Bharti Airtel to the Bharti promoters. And most likely, what I understand from sources, is going to be an off-market transaction.
Okay, all right, Nimesh, thanks very much for that. So that's the big story on Bharti Airtel. But moving on to the third headline this evening then, the Ministry of Fertilizer has issued packaging rules for fertilizer companies, which said that 2/3 of the fertilizer company's bag will use the logo of the government's fertilizer scheme Bharat, and 1/3 of the bag will be used for the fertilizer company's name and logo. Sonal Bhutra is here to tell us more about the impact this could have on the companies.
Thanks a lot for that. Well, yes, the government has come out with new rules as far as packaging for fertilizer company bags are concerned. They say that they will implement one nation, one fertilizer rule by introducing single brand for all the fertilizers, be it private sector or public companies like RCF, NFL, etc. Single brand name for some products like urea will be Bharat Urea, for NPK will be Bharat NPK, DAP will be Bharat DAP, and so on for other products as well. Now, after this, what happens is 2/3 of the fertilizer companies' bags, they will have the fertilizer subsidy scheme, which is run by the government, and also the unified brand that the government has announced. And 1/3 of the bag will have the company which is producing that particular fertilizer's logo and other details as the ones that are required by regulations as well. So fertilizer companies, according to the government, should not procure old bags with effect from 15 September, that is the next month, and new bags under the new scheme will be introduced with effect from 2nd October 2022. And they have by the end of this year, that is 31st December, to completely fade away the older bags from the market. Now, it came across as a sentiment negative for, say, private companies whose brand visibility could be impacted by this particular change in packaging rules. However, this is just a sentiment negative. Overall, on the longer term, they have good brand visibility, they have better distribution and higher market share in distinguished territories or markets as well. So it is not such a big negative that has come across. But yes, there is a big change as far as packaging is concerned in this particular sector.
Okay, all right, Sonal. Thanks very much for that. We need to take a short break, but before we do that, we'll leave you with some more market opinion we got through the day. Stay tuned. We'll be back in a jiffy.
I think that if you look at emerging markets, there are about 150 developing countries out there. So I think that the Fed's decision has a different impact on different markets. But clearly the most vulnerable to me is China, because, we've spoken so much about inflation and how inflation is rising everywhere. But one country that is still suffering from possible deflation is China. Their ability to stimulate and cut interest rates is going to be constrained by the fact that the Fed is increasing interest rates because that accelerates capital outflows from China. They don't want a repeat of that. The currency has already depreciated around 7% or so this year.
Welcome back. Well, you're still with us on Markets today. Well, let's get to all of the rest of the headlines that we're tracking for you. The fourth headline this evening, Lupin fell over 2% after the company is yet to receive approval for its key inhaler drug, Spiriva generic. Separately, the company has also entered into an exclusive licensing agreement with Japan's Irom Group on a particular biosimilar which is used for menopause. Now, in terms of Lupin, a couple of key important points for Lupin. The stock was under pressure today as well. They have received a complete response letter for Spiriva generic, which is basically an inhaler drug, which is $700 million in terms of sales. And the expectation was that they could hear something from the US FDA on this particular drug in the month of August. They had a target action date. What has happened is that the CRL basically means that they've got additional queries from the US FDA on this particular drug. The street was anticipating an approval soon enough and a launch in Q4. What this probably changes in terms of estimates or in terms of expectations is the uncertainty that maybe the launch or maybe the approval will not come in time for that Q4 launch. However, the company is confident that they will still continue to launch the drug in Q4. Now, like I mentioned, $700 million in terms of a drug, it is expected to add to their inhaler portfolio, which is around 30 to 40% of their US sales. And separately, they could probably make around $100 million in terms of base sales from this product if in case there are around only 3 players in this particular product. There are assumptions of wide sale estimates for it, but nonetheless, one of them is $100 million per year from this drug, and hence it is a lucrative opportunity for them. The company remains confident. They've said that they will be responding to the CRL and they will hope to get approval by Q4 and launch the drug by Q4 itself. So that would be an important trigger for Lupin to look forward to going forward. But separately, they did also enter into a licensing agreement with a Japanese company on denosumab, which is basically a biosimilar which is used for menopause. And this would be possibly a longer-term opportunity. It's an exclusive licensing agreement with regards to some rights given to this particular company, Lerom. So let's see how things pan out for Lupin. Currently, the street seems to be fixed on what exactly would happen with Spiriva generic. We did speak to the management earlier in the day. Let's listen in to what they had to say.
Even at the beginning of this year, we did talk about the fact that the most important event for this particular year would of course be Spiriva itself. We do have a CRL on that, and that is the reason why we didn't get an approval in August. But having said that, we're still very, very confident that we'll be able to resolve it and potentially get an approval by the end of the fourth quarter. So fourth quarter launch is exactly where we think it would be. Confidence levels remain pretty high on this, so we are very confident that we'll be able to answer that. We need to, of course, go back to, and which you should be doing very shortly. This would, of course, not, from our perspective, not inhibit our ability to come out, with the product by the end of this, fiscal.
Okay, so that's Lupin, currently at around 664 rupees. On to the fifth story this evening then. We take a look at all of the stocks in news. Let's start with RBL Bank. That stock rallied 5% on the back of a large deal that took place, large trade that took place. Nimesh is here with the details.
Yesterday everybody was surprised with the kind of move we saw. Intraday the stock was up 20-odd%. Even today the stock is up 7-odd%. Now, yesterday post-market there was a disclosure of on the block deal data that suggested that the college retirement fund did buy 45 lakh shares at an average price of 108, which works out to close to 50 crores of worth of RBL stake that they've bought in yesterday via block deal. Now, I was just looking at this particular fund. It's a large fund globally. It's one of the big funds of the US. And globally, they manage, in terms of asset under management, they manage over $1 trillion. So it's a large fund, and maybe that's why the stock is reacted positively. Remember, today is the expiry, but the stock is in F&O ban. So bit of covering. Maybe for the last couple of days, apart from this buying interest, there could be some bit of short covering as well. What has done is this particular deal and the interest of a large fund buying into RBL Bank has led to a bit of a rub-off in the other private bank names, small private bank names as well. So for the last couple of days, most of the stocks are buzzing. But for RBL, there was a disclosure last evening that college retirement fund did buy 45 lakh shares, investing close to 50 crores in RBL Bank.
Okay, all right, Nimesh, thanks very much for that. Let's move on then. Asahi India hit a 52-week high to end the day close to 1% in the green. In fact, the stock is up 33% this year. What's helping the stock rally? Sonia is here with the details.
So Asahi India is a big beneficiary of the rising auto demand and the surge in new vehicles that have come on board. In fact, the stock is at a fresh 52-week high today. It's up about 33% in 2022, and its market cap has now hit 15,000 crores. Now, why is it a proxy for the auto segment? It's because Asahi India manufactures glass and windows for auto and the construction industry. Now, Asahi India enjoys 74% market share in the passenger vehicle industry. So all your cars, whether it's the Mahindras, the Maruti, Toyotas, you have Ashok Leyland, all of these window panes and glass is all made by Asahi India. They've supplied glass recently, in fact, to a lot of the new launches as well, whether it's the Kia Carens, the Volkswagen Taycan, the Skoda Kushaq, even in the two-wheeler space. Now, they manufacture glass not just for autos, they do it for 4 industries: autos, building and construction, consumer, as well as industrial. And they have a very strong presence in architectural glass, which is used in all your building panes. Now, they're the second largest manufacturer of float glass in India, and they have a 17% market share in the domestic architectural glass segment. The other thing is that the earnings for this company have been very good. So if you look at the last quarter in Q1, the revenues went up 53% year on year. The profits went up over 200%. Of course, it was on a low base, but just the fact that there are a slew of new launches coming in, especially in the electric vehicle space, in the passenger vehicle market, Asahi India could continue to be a big beneficiary of this theme. Back to you.
Okay, all right, Sonia, thanks very much for that. Well, Route Mobile surged by nearly 4% in trade after Rajdeep Kumar Gupta, the MD Group CEO and promoter at Route Mobile, told CNBC-TV18 that the company expects to achieve 50% revenue growth. He also added the company is evaluating a company in terms of an acquisition. Listen in.
The large volume coming from Africa, it might create a little bit issue of price decrease on price per transaction, but I think we are well on track as compared to what we achieved in last quarter, and whatever the guidance we have given to the market that we will overachieve 50% target. We have our internal aspiration to grow our GP somewhere between 25 to 30% in coming quarters. And we are looking forward for that, and we are working towards that. So I think we are still guiding between 11.5 to 12.5% as of now, and between next few years, probably we are aiming to grow that to 14 to 15%. But as of now, if you talk about the guidance, anything between 11.5 to 12.5% is something what we are targeting right now. We are evaluating a few companies in this space. Along with that, I think we believe that in coming days, the authentication is going to be seamless, and OTP can be replaced by mobile identity. So there are different use cases which is arising now where people are looking out for a seamless authentication. So we are evaluating a company in mobile identity space, and very soon we would love to announce that acquisition. Our complete aim for next 18 months is to integrate all the acquisition which we have done. And I think we are fairly integrated the finance part of all the company we acquired.
Okay, so that's Root Mobile. Stock was up around 4% today. PSP Projects, in fact, jumped on orders worth nearly 250 crores, which they've acquired. The company's CMD and CEO told CNBC-TV18 that it bagged a 143 crore order from L&T. He added that it would maintain its order book target for FY23 as well.
47 crore order which we declared yesterday. It is more one is the museum from government of Gujarat, which is at Vadnagar, and 143 crore is an order which is the first largest order for our precast plant, which has come from L&T. So probably it would be very easy for us to reach to 2,200, or maximum we can go up to 2,500 crore, which we have projected for this year.
All right, well, let's move on to the real estate space then. DLF gained over 1% after the company said that it had plans to launch 35 million square feet over the next few years with a sales potential of 47,000 crores. Ashok Tyagi, the company's whole-time director, said the annual booking target of the company was at around 8,000 crores in FY23, and the quarterly run rate will improve by the end of the year.
Obviously, internally, we are trying to do better, but what we had guided the market also was that an annual bookings target of about 8,000 crores, which is 2,000 crores a quarter. So Q1, we definitely came in on. The vacancy levels moved up from 5% to about 15%. But the 85% people who were occupying, there was no rental disruption there at all, throughout even the worst days of the pandemic. The vacancy levels have begun reversing now. So I think from 15% vacancy level, we are now talking about 12% currently, and hoping to come back to that single-digit number by the end of the year.
Okay, more companies on our radar then. NHBC surged by over 4%. NHBC is in focus as they have signed an MOU with the Rajasthan government for developing of 10 gigawatts of renewable energy parks in the state. The company has also signed an MOU with BEL to set up a large capacity solar equipment manufacturing facility. AK Singh, Chairman and MD at NHBC, spoke to CNBC-TV18 on these deals.
Actually, Rajasthan, the discussion is going on last almost 6-8 months. And we have also acquired some land over there through the lease basis. We have already floated a tender for 600 megawatt, and it is under discussion with the state of Rajasthan for signing of the PPA. If it happens, then we'll award 600 megawatt, which already been tendered.
All right, on that note, it's a wrap on this edition of Markets today. Thanks very much for watching.